The market is again sending two completely different messages right now. On one side, we have Bitcoin dropping below 63,000. More than 173 million was liquidated from crypto markets in a single hour. Fear is back. Traders are questioning whether this rally is over. But on the other side, the Russell 2000 just broke above 3,000 for the first time ever. Glassnode's altcoin cycle signal has officially entered altcoin season territory. Major corporations are increasing XRP exposure. Ripple just secured another major regulatory victory in Europe. And capital continues flowing into XRP-related ecosystems while several competing networks are seeing significant outflows. So the question isn't whether volatility exists. The question is whether the market is focusing on short-term price action while missing what's developing underneath the surface. Because when you zoom out, the picture starts looking very different. But before we jump in, nothing in this video is financial advice. Always do your own research before making any investment decisions. Welcome back to Ledger Pulse, your source for the biggest developments shaping crypto, digital assets, and the future of global finance. Today, we're connecting several stories: market fear, altcoin season signals, economic expansion, institutional XRP adoption, and Ripple's accelerating presence across Europe. Let's start with the event that got everyone's attention. Over the past 24 hours, headlines were dominated by Bitcoin falling below the 63,000 level. Cointelegraph reported that more than 173 million in crypto positions were liquidated within a single hour. Whenever these moments happen, sentiment shifts quickly. Social media fills with predictions of deeper corrections. Analysts begin discussing support levels, and traders start questioning whether the market has topped. But one thing we've seen repeatedly throughout crypto history is that liquidation events often create emotional reactions that are much larger than the actual change in market structure. A few percentage points lower can feel like the end of the world when leverage gets flushed out. Yet many of the strongest rallies in crypto history have begun immediately after periods of maximum uncertainty. That's because markets don't move based on how people feel. They move based on positioning. And when excessive leverage gets removed from the system, conditions often become healthier rather than weaker. This doesn't guarantee an immediate rebound, but it does remind us that price alone rarely tells the complete story. To understand what might happen next, we need to look beyond crypto itself. While crypto traders were focused on liquidations, another market quietly achieved a major milestone. The Russell 2000 index moved above 3,000 for the first time ever. That may not sound exciting at first, but this really does matter, because the Russell 2000 tracks smaller US companies that are often highly sensitive to economic conditions. Historically, when investors become confident about future growth, capital tends to flow towards smaller companies and higher risk assets. In other words, the Russell 2000 often serves as a barometer for risk appetite. And right now, risk appetite appears to be strengthening. But that's not the only signal. Here we have a post from Moonlambo, highlighting recent PMI data is also showing economic expansion. The copper to gold ratio is breaking higher. Risk off assets like gold and silver peaked months ago and have largely stalled. Those developments may seem unrelated to crypto, but they all point toward the same theme. Investors are gradually rotating toward growth and risk. The important distinction is that crypto has not fully participated in that shift yet. Historically, crypto tends to lag these transitions before eventually accelerating. That's why some macro analysts believe the current environment looks very different from the 2022 bear market. Back then, liquidity was being removed from the system. Today, several indicators suggest conditions are gradually improving. If that trend continues, crypto could eventually become one of the largest beneficiaries. And we're already seeing early signs of that rotation. Another development from Glassnode: their altcoin cycle signal has moved back into alt season territory. According to the data, Bitcoin's recent weakness combined with easing selling pressure across altcoins has created conditions that historically favor broader market participation. This doesn't mean every altcoin suddenly goes vertical. That's not how markets work. What it does suggest is that capital may be starting to rotate away from Bitcoin and into alternative digital assets. We've seen this pattern before. Bitcoin leads, liquidity enters the market, confidence builds, then investors begin searching for opportunities further out on the risk curve. That rotation can take time, and it rarely happens in a straight line. But when it begins, it often catches people off guard, because the market narrative is still focused on fear. Remember, the headlines today are talking about liquidations and price declines. The data, however, is starting to tell a different story. And one asset that continues appearing in these conversations is XRP. XRP ledger-related assets have reportedly attracted approximately 1.7 billion in net inflows over the past 60 days. At the same time, several major networks experience substantial outflows. Now, whenever discussing capital flow data, it's important to remember that methodologies can vary, but the broader takeaway remains noteworthy. Capital appears to be moving toward XRP-related ecosystems. Why, you ask? Because investors are increasingly focusing on utility, infrastructure, and real-world integration. For years, crypto narratives were dominated by speculation. Today, many participants are asking a different question. Which networks are actually being positioned for institutional use? That question naturally brings attention toward the XRP ledger, tokenization initiatives, payment infrastructure, stablecoins, and settlement systems. Whether someone is bullish on XRP or not, it's becoming difficult to ignore how frequently it appears in discussions involving real-world asset tokenization and institutional adoption. And that trend received another boost from overseas. One of the biggest developments this week involved Ripple's continued expansion throughout Europe. According to reports, Ripple received additional regulatory approval tied to its MiCA strategy through Luxembourg. Why is that important? Because MiCA is rapidly becoming one of the most comprehensive digital asset regulatory frameworks in the world. For years, institutions have repeatedly said the same thing. We need clarity. Not hype, not promises, clarity. Europe is increasingly providing exactly that. As a result, banks, fintech firms, payment providers, and enterprise customers now have a clearer path toward engaging with digital assets. This creates a significantly different environment than we've seen in previous cycles. The conversation is no longer simply about buying crypto. The conversation is increasingly about integrating crypto infrastructure into existing financial systems. And that's where Ripple has spent years focusing its efforts. The significance isn't just the license itself, it's what the license enables. We're talking about access, expansion, scaling, and potentially onboarding new institutional participants through the European Economic Area. That story becomes even more interesting when we look at what corporations are doing. Another headline that caught attention came from Japan. Gaming and blockchain company Gumi announced plans to become Japan's largest XRP treasury company. Let's think about that for a moment. For years, public companies primarily accumulated cash reserves. Then we saw some firms adopt Bitcoin treasury strategies. Now, we're beginning to see corporations explore alternative digital asset treasury models. Gumi's restructuring efforts indicate that XRP is becoming a larger strategic focus for the company moving forward. The company is also expanding its relationship with SBI Group, one of the most influential financial organizations in Japan. This is why that matters. Japan has historically been one of the most supportive jurisdictions for XRP adoption. The broader implication is not that every company will suddenly buy XRP. It's that corporations are becoming increasingly comfortable holding digital assets as strategic reserves. And when that trend expands beyond Bitcoin, it creates a new layer of demand that didn't exist in previous market cycles. So while most discussions focus on short-term price movements, some analysts are paying attention to a much bigger chart. A chart shared this week highlights Bitcoin's relationship with its 200-week moving average. Historically, major market bottoms have formed around this region. The observation isn't that history must repeat. Markets evolve, conditions change, and nothing is guaranteed. But many long-term investors pay attention to these historical relationships because they provide context, and context matters. When fear reaches extreme levels, investors often become convinced that price can only move lower. Yet major opportunities frequently emerge during those exact periods. That's why experienced players spend less time reacting to daily volatility and more time evaluating long-term trends. The goal isn't predicting every move. The goal is understanding where we are within the larger cycle. And according to several macro indicators, this cycle may still have far more room to develop than many people currently believe. So let's connect everything we've covered. Bitcoin falling below 63,000, liquidation spike, fear returns, but simultaneously, the Russell 2000 reaches a historic milestone. Economic expansion indicators improve, Glassnode signals altcoin season conditions, capital flows toward XRP-related ecosystems, Ripple expands its regulatory footprint across Europe, a major Japanese company increases its XRP commitment, and long-term market indicators continue pointing toward a broader cyclical expansion. When viewed together, they begin forming a narrative suggesting that infrastructure, adoption, regulation, and capital flows continue advancing despite short-term volatility. Markets rarely move in straight lines. Corrections happen. Fear appears, sentiment shifts, but beneath the surface, the foundations often continue strengthening. And that's exactly why focusing only on price can be misleading, because sometimes the most important developments aren't happening on the chart, they're happening behind the scenes. As always, the biggest question isn't what happened today, it's what today's developments could mean 6 months from now. Do you think this recent pullback is simply another shakeout before a larger move higher? Or do you believe the market is signaling something different? Drop your thoughts in the comments below. If you enjoyed this breakdown, make sure to like the video, subscribe, and turn on notifications so you don't miss future episodes. And if you want another deep dive into where crypto adoption is heading next, check out the videos on your screen right now. Thanks for listening, and I'll see you in the next one.